Hello, ladies and gentlemen. I'm going to sell short euro. So if you're looking to sell euro, I'm placing an order to sell at 119.33.2. Price I'm looking to sell for 119.33.2. This is when I want to sell. So you still have time if you want to follow this trade. Please do so. So you still have time. You can place an order and you will sell position on euro. I'll speak to you later when the order will be filled.
To change the stereotypes about women. It's not only the business of women, but men have to be part of it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
Goldilocks died probably a year ago. The era of low inflation and low rates and good growth is probably over.
Global growth is going to move higher this year as we emerge into a new state of normalcy.
There's a battle, I think, going on between what the market thinks will happen and the Fed wanting to say, look, hold your horses.
A big story going forward will be what happens to wage growth.
As we come out of this crisis, it'll be a bit harder to get all those people back to work.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It's Payrolls Friday from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures down 7 on the S&P. We're off by 0.2% on the S&P 500. Tom Keene, the Payrolls Report, 2 hours, 30 minutes away.
The jobs report was in a fascinating day, John. What has occurred overnight is the plumbing. That's a word we're going to hear a lot of today. The plumbing of the fixed income markets is seen in the overnight paper market, in the repurchase market, the so-called repo market. This is way inside baseball. We've got a great set of people to drive forward that joint conversation of the jobs report and challenges of liquidity.
And throw in a little Chairman Powell as well, Tom. Too dovish or not dovish enough? Is he stuck between a rock and a hard place right now or what?
Yeah, it is truly a lose-lose position, and I really don't care if it's Chairman Brainerd, Chairman Powell, Chairman Greenspan. Doesn't really matter. We're coming out of this. They're looking for salvation from the chairman of the Federal Reserve System, and there's only so much he can do. We've also got to watch the stimulus. I believe Lisa's down, John, reading the entire document on the floor of the
700
Senate.
pages.
She's doing that because we haven't, Tom. And what's in it, Lisa?
A lot of really interesting stuff. I need to get to the end. I still have the weekend, as do all of the senators.
She has a Cliff Notes.
I've got the Cliff Notes. I'll be reading it throughout the afternoon. Look, we do have a policy surprise, big time, right? And basically, there's been a policy put down in Washington, D.C., the expectation, John, that we're going to get this $1.9 trillion bill passed. The policy in Washington, D.C. from the Federal Reserve, a lot less certain. We're talking about what the market wants. They want a put on volatility. And right now, the Fed is showing that they are more willing to tolerate perhaps a greater degree of volatility than some traders are comfortable with. And the consequences of that, really the question is how far-reaching will they be at a time when there is so much accommodation elsewhere, John?
Look, if I wasn't looking at growth equities and just looked at the curve this morning, Tom, I'd say the Fed's getting what it wants. The clue's in twos. Two-year yields are pretty stable here at 13, 14
John,
basis points. At the long end, yields have been rising. Why? Because growth's better and the Fed's going to sit it out. Isn't that the story here?
Across the history of all central banking, this has been documented. They want the markets to help them to get to the policy outcome. Certainly, we've seen that to that tip point with the way the 10-year yield moved yesterday. You wonder where that tip point is. It's certainly being recalibrated as everybody writes their research notes for Monday.
One thing that's very important, now the fundamental data has to match the optimism that's getting baked into stocks, because right now what the Fed is saying is you guys can do it a little bit on your own. And right now the valuations have to be justified by the fundamentals a bit more than they have been over the past year.
You know, John, I think this is so important. David Rosenberg was on one of my other properties yesterday, not yours, John.
Okay.
And he was on fire about what Lisa just said, is you know what, we've got to get the data and don't be so sure it's going to be the vaunted 7% GDP.
It's the better data that's disrupted this market.
Yeah.
It's the better data.
Okay, guys, position open on euro at 119.83.2. Short position. So all of you who've opened as well position, please do follow and please do not sell if, for example, right now you see the loss, because we use absolutely different strategy compared to other guys from academies or whatever. That's why we make money, and those guys just sell on losses, right? So please hold, please follow this trade, and I'll let you know when to enter stop on profit.
Idea of policy surprise here, front and center also with OPEC Plus and what they did. All right, 8:30 a.m. We've been talking about the February jobs report. And honestly, we have seen improvement in data, and that is the reason why yields are rising, but we haven't seen the improvement in the labor market. Do we see it here? The expectation is massive. The spread is negative 35,000 to upward beyond 500,000 new jobs registered in the month of February versus an average addition of 29,000 since November. So real small gain. The expectation is 195,000. That is the median estimate. Jobs start to matter more here, and it'll be interesting to see what the reaction is in markets. Then today at 1 p.m. we get that U.S. Baker Hughes rig count. The reason why I'm interested in this is because it really shows the shale flexibility here to ramp up production in response to these higher prices. At what point does shale come in and really provide the swing vote almost in the shale production, the oil production world? And then today we're also going to be hearing from the Senate. I will be personally reading 700 pages of the document to everybody, and I'll be making sure that we all go to sleep really well tonight. There is a question of how much momentum the Democrats can get, John, to get some of the other priorities of the Biden administration in place, in particular infrastructure, after this bill.
I'll catch up with Jared Bernstein a little bit later after the payrolls report, so looking forward to that conversation. Thank you, Tom. 198k, then your median estimate. The range, Tom, high, 500k.
Yeah.
500k, and your low is negative 35,000 going into this print.
You know, I've got the phrase beneath the headline data, and every economist has a different view of what's beneath the headline data. John, I always looked at median duration as a really interesting statistic of unemployment, but I'll go to what we talked about yesterday, which is Robert Goodman from ages ago at Putnam, working with David Kelly years ago, talking about employment to population, comparing those that are employed as compared to the body of the public. That's a great relative statistic over the span of time.
Let's turn to Catherine Mann, patiently standing by for us as we all talk over each other. Citi Global Chief Economist. Catherine, fantastic to catch up. What the Fed's looking at has changed compared to what it used to focus on years ago. Catherine, what should we be focused on going into this payrolls report in a couple of hours' time?
Well, clearly it is, you know, the numbers that matter for the Fed is the inclusive employment number. They've emphasized that even before COVID, by the way, they were emphasizing the need to have inclusion in the labor market. They've put it together even more explicitly in their new statement of monetary objectives. So, you know, that's what we're looking at. It's not the inflation number. We're nowhere near inflation being a concern. So we're looking at the employment numbers.
Catherine, long ago and far away, and you're far too young to know this, there was a gentleman named Rube Goldberg that made little systems during the Depression that our parents loved to talk about. And a Rube Goldberg system, folks, was fascinating, like the falling dominoes, and it would end up being a glorious end to it. Catherine, there is a belief among bond sophisticates over to fancy economists like yourself that there's not a rigged system, but a complex news system that could collapse at any moment. Witness the repo market, the plumbing right now in the system. How Rube Goldberg is the American economy right now?
Oh, that's a big question. Well, I think, Rube Goldberg had several different elements that were key. The issue here is that the market has been pricing in superior economic performance for the United States on the real side for a year, almost a year. COVID occurred, and then we had a bounce back, and then the market basically believed that we were going to come out of this and be extremely well off. The real data has not yet matched the market expectation, every good news has been priced in more than once, and so it's going to be very hard for any data, no matter how good it is, to match what the market believes they have already priced in. So I think that's the most significant problem is that there is no good data. There can't be any good data that will match what the market expects because they've already priced it all in.
Okay, so what do we need theoretically from the jobs data to confirm what's getting baked into markets?
So, the Fed has said we are going to be accommodative until we get to an inclusive employment. So if that's what is going to make the markets happy, then, that's what we're going to get. But the problem is that half of the market wants to have better job data and a tighter running economy, and the other half of the market is scared of that because of the potential inflationary consequences. So there are sort of these different directions within the market that the better data is already priced in by some, but the better data implies higher inflation expectations and higher inflation data for others. Right. Those are not consistent.
Dr. Mann, your Andrew Hollenhorst made some splash here the last few days with a huge number on payrolls, whether it's 300, 400,000, maybe the man whisper numbers 500,000, I don't know. Is that a one-off statistic, or are we going to see month after month after month way above the 200,000 norm we used to be used to?
Andrew has been optimistic about the U.S. economy really since even after the initial COVID crash, and he's been close to right, at least on the numbers, on terms of growth numbers. But there has been this really big disconnect in the U.S. economy between what we see in terms of production numbers, which is GDP, and what we see in terms of employment numbers. And there's just a tremendous disconnect between those two. This is what the Fed is challenged by, and part of that, of course, is because the most labor-intensive sectors are the ones that have been closed off through the lockdowns, the services sector. And the storyline is that you maintain the very strong employment numbers in manufacturing because everybody still has a lot of money to spend on goods, and yet you open up the services sector, which is the labor-intensive sector, and that's when you have the floodgates of jobs coming back. Now, I think there's a more of a delay in terms of how people are going to spend these additional checks, and I think there's a little bit going to be some time to take to bring all of those service sector workers back on board. So I think I don't see as much of a bounce in terms of the employment numbers. I think it's more of a 6-month process, maybe even longer than that.
Catherine, good to see you, as always, especially on Payrolls Friday. Catherine Mann there, Citi Global Chief Economist. Your estimate this morning, 198,000, 198,000. Citigroup, Tom Keene at 410.
Yeah, well, those are the estimates. But again, John, I'm going to do this. And I believe in all these years, John, I have never said this on a jobs day until now. The linkage here of the jobs day into a 154 10-year yield, which many pros say could cut either way. You could go 10 basis points up, or you could come 10 basis points in based on a set of news flows.
Well, dare I say, Lisa, maybe the biggest risk to this equity market right now is a blowout jobs report.
Yeah, is reality, and reality being as good as they expect. But what Catherine Mann was saying here, that basically the market is bifurcated, doesn't know what it wants. It wants one thing on one hand and the opposite on the other hand. And this conundrum is going to really pose a problem, John.
Coming up on Jobs Day, here's the plug. Big lineup on the open for reaction to the numbers. Looking forward to that a little bit later, including the Council of Economic Advisors member Jared Bernstein, Barclays, Michael Gapin, JP Morgan's Anastasia Amoroso, and BlackRock's Rick Reeder.
That's it.
And some more. From New York City this morning, good morning. This is Bloomberg.
Okay, day traders, time to place stop on profit. We will go down to 2 pips just to make sure that if it will change direction, we will end up with profit. Okay? So stop on profit at 119.31.2. And let's see if we will move further our stop on profit or if it will get filled at this level. Whatever happened, you will not going to lose your trade. Don't forget, this is day trading. You don't have to trade with fundamental analysis once a week or once a month or whatever fundamentals change. This is day trading, and techniques we use, quantitative analysis, quantitative techniques, technical analysis, based on a relatively small profit, but we're going to do it many times a day. So overall, at the end of the day, it will get into really good profit. Okay? If you want to get strategy, you can go to our website, company.co.uk, or you can see on the red line, this is where strategy is located on the website. So you can get the strategy and you can start trading different pairs, because on our screen you can see only how many? 6 pairs, 6 different pairs. Okay? All explanation, all courses, everything is in the strategy. I'll speak to you later, guys.
24 hours a day, I'm Ritika Gupta. This is Bloomberg.
Nuestro país, igual que los demás países del mundo, no está preparado para esta pandemia. Más aún, los más afectados son los países de desarrollo como el nuestro, ¿no?
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change. Bloomberg Green has you covered.
It's a broad range of financial conditions that we're looking at, and that's really the key. It's many things, and we want to see, and would be concerned if we didn't see disorderly conditions, orderly conditions in markets, and we don't want to see a persistent tightening in broader financial conditions. That's really the test. It's not appropriate to isolate one particular interest rate or price.
Fed Chair Jay Powell in the last 24 hours. You know what the trigger is? Tight financial conditions. Have we got it in credit? Yeah. Not yet. No signs of real stress right now. This is not late 2018. Now, maybe you might say yet. Okay, that's a forecast. This is an observation on where we are right now. Not there yet. Tom Keene, Lisa Abramovich, I'm Jonathan Ferro. Here's the price action this Friday. Going into payrolls looking like this. Equity futures down 3 on the S&P. We're off by about 1/10%. In the bond market, Tom, yields in a couple of basis points, 154.18. Crude 65.29, up by about 2.3% right now. Your median estimate, 198. Your range, positive 500K all the way down to negative 35.
John, what's so important about that data check, it does not capture the tension between the longer duration market, worried about inflation, worried about jobs, and the short-term paper market, which in the last 24 hours is absolutely extraordinary. John, I want to draw our viewers' attention worldwide to something we've never seen in our lifetimes. John Paul tried to visit Iraq under Saddam Hussein and was not allowed to. John, there's no greater sense of a pandemic ending than Pope Francis visiting a place of great biblical heritage. This is an extraordinary image, John, truly unprecedented in our lifetime. Pope Francis visiting with Prime Minister Mustafa al-Kadhimi in Iraq. There's no measurement, John, for the symbolism of this.
I agree, Tom. A really historical moment for the world.
Just absolutely unique. With us now, Emily Wilkins with Bloomberg Government, as we look at not the pageantry of Pope Francis in Iraq, but the pageantry of the reading of the bill. Emily, explain to our audience worldwide and from sea to early morning shining sea why we are reading a 600-page document. It seems so juvenile.
Because this is how the United States Senate works.
Let's move our stop on profit further. We need more profit, yeah? We don't hold because we love this pair. We hold it because it gives us profit. So I'm placing a stop on profit at 119.28.2. Okay? We love this pair because it gives us profit. Euro against United States dollar. Okay, guys, so if you purchase this strategy, if you sold as we did, just right here, please do so. Please place stop on profit. And like I said, whatever happened, you will not end up in losses. And it's good to enjoy the profit that you will make in just a couple of hours. I'll speak to you later.
Remember, they only need to peel off one Democrat of that 50 if they want to get one of these amendments included. And so that can sort of change the structure of things. Because right now, the way it is, Democrats have sort of struck agreements to satisfy both centrists as well as more progressive people with the bill, just sort of shoring up support, getting everyone on board. But if one of these Republican amendments is actually added to the bill, that could shift the dynamics and potentially jeopardize the bill in the House.
Meanwhile, let's look beyond that to the infrastructure bill, because that's where the talk really seems to be going, and Republicans pushing back against plans to do more deficit spending. How realistic are particular tax provisions later this year as Republicans say, we're on board with you, but you got to tax?
I mean, this is one of the biggest debates right now about this upcoming infrastructure bill. This is the main question in Washington. how do we pay for it? Because there are a lot of ideas out there. A lot of them are somewhat controversial. There's a lot of pushback to the idea of raising the gas tax. There are other ideas. I mean, Senator Warren's put forward a wealth tax that she's hoping will be considered for this. Negotiations at this point are still really early in the process. So the question of pay is going to be one that we're going to watch really, really closely over the next several weeks and months as this next big package gets developed.
Emily, are they negotiating across the aisle or within themselves, between themselves?
At this point, they have talked to a couple of Republicans who have said, you know, we're trying to work with Democrats on this. I've talked to Democrats who have said, hey, you know, we do want to work with Republicans. There is still that hope that there can be some bipartisanship here, especially because of this reason. I mean, Democrats are using this budget reconciliation thing to pass this current stimulus bill with only Democratic votes. But remember, not everything can be passed through budget reconciliation. There are certain limits. And even in the bill we're seeing debated right now, they already took out a number of provisions dealing with transportation and infrastructure. And so if Democrats really want a solid infrastructure and transportation bill to go through this process, they're not going to be able to get everything they want. Eventually, they are going to need Republican assistance to pass certain things.
How does horse trading occur in 2021? Senator Schumer was on yesterday or the day before, I guess in a private call with Democrats saying, let's go, let's go, let's go. I mean, Emily, they're not at the Willard Bar with cigars in hand walking up and down that historic aisle or the Octagonal Bar. Not that I've ever been there. But Emily, how does horse trading actually occur in the modern day?
So someone asked Chuck Schumer this at a press conference recently, and he held up his very outdated flip phone. He doesn't have a smartphone; he has a flip phone, and he says it's through communication, it's through email. But remember, I mean, the Senate is still there. The Senate has been meeting actually pretty frequently compared to what the House has been. So senators are still the chance to talk with each other, even if it's not within DC's bar scene, which is pretty much still closed.
Emily, great to catch up. The important question at the end there for Tom. Emily Wilkins, Bloomberg government reporter, thank you. Looking at the FX market, bit of dollar strength creeping in here. Sometimes these levels just break and you don't notice, but here we are. Euro dollar a break of 120 earlier, 119.28. Dollar yen with a break of 108. Dollar yen now 108.52. And cable with a break of 138, now 137.97. That's dollar strength there across the board against the euro, the yen, and the euro, and the pound.
Dead on, John. What's news there is what moved and what didn't move. Swissy was actually pretty good, but John, yen out to a 108.53. That's very beneficial for Japan to begin with in the short term. But John, that's a really important.
Hold on, guys. Just in about 20 minutes, we made a profit. Position closed. And if you place a stop on profit, as I said, the system automatically closed your position. So we closed at 119.28.2. Depends on the on your spread and depends how much broker pays you per pip. If you're trading on margin, you already know what kind of profit you made. Well done, guys.
And John, I'm sorry for the gold bulls. It's been a very, very tough run the last couple of weeks. The break under 1,700 is a big deal.
Real yields driving things in the gold market,
and
not inflation expectations.
And people saying, John, real yields going to zero. They're not mincing words.
That's
real
positive.
Yields, smacking around
it's
equities.
Nice how you do that, John. You get right to your other property here.
Real
you
yields,
prepare for 1 p.m.
hitting gold.
That's good.
Coming up later.
Coming up
Bloomberg
later after the 9 a.m. show is the 1 p.m. show.
Looking forward to catching up with Priya Misra too.
Dr. Phil.
Maybe Rick Reader could
Priya
be
was
on
busy
all
at
three
lunchtime,
shows.
so she promised she'd join us at 7 Eastern. She'll do that on this program in about 40 minutes' time. Looking forward to that. From New York, this is Bloomberg.